What I worry about is that the regulations around the space will not be either applied or rethought in a thoughtful enough manner to allow this asset class to properly flourish the way that I hope and think it ought to.
With new, truly transformative technology, inevitably comes new regulation. But what happens when that technology is advancing so fast that regulation seems unable to keep up? Seemingly, this is the case for cryptocurrencies and blockchain technologies. So I spoke to Craig Salm, head of legal at Grayscale Investments, the largest digital currency asset manager in the world, about how the legal landscape is changing. Craig, thank you very much indeed for taking the time to chat with us today.
Thank you for having me.
Just to give us an idea of the dynamic nature of the company you work for, are funds coming in thick and fast? Are you designing new products all the time? What's your current day-to-day?
Yeah, so we are very much creating product structures wherever we see investor demand. So if you look at the life cycle of our product history, started with Bitcoin at the time, 2013, that was the only cryptocurrency that actually was relevant. But then following that, we launched Ethereum products, other privacy-preserving cryptocurrencies, and now we're getting more into the diversified type of product launches because we're seeing that investors, while they may or may not want to make a targeted bet on a particular coin, whether that's Bitcoin or something else, they'd rather just get the diversified index-like exposure, so that way they don't have to pick and choose winners and losers.
And I think I'm just getting my head around DeFi 1.0, but already there are products more along the line of DeFi 2.0.
Apparently there's a 2.0 in DeFi now, which is
Could you explain a little bit about that?
Sure. So I think even before we get to DeFi, it's helpful to start off in the simplest example of a cryptocurrency, which is Bitcoin.
Right.
Bitcoin allows you to hold, send, and receive value in the digital world. Very simple use case. Investors like to think of it as a digital gold, and that narrative really resonates with our investors, the digital gold narrative. But moving beyond Bitcoin, developers wanted to do even more complicated types of transactions other than just holding, sending, and receiving. So Ethereum came along, and what that did was layer on more complex or conditional-based transactions. So whereas Bitcoin lets you send money from A to B, Ethereum lets you send money from A to B if this happens, or while that's happening, or some other condition. And things like smart contracts are what allow you to do that type of activity. Decentralized finance is sort of the third iteration of it, and what that's doing is layering on traditional financial services like exchanging and lending and borrowing and derivatives and insurance and asset management and all these other financial services that everybody around the world knows and uses, but has not yet been applied to cryptocurrency until DeFi. So that's DeFi 1.0. DeFi 2.0 I would just describe as doing those things in even more efficient and interesting ways.
And that includes the metaverse. How does that fit into it all?
The metaverse is something separate from DeFi, I would say. A lot of people actually now are grappling over what exactly that term means. In some sense, the metaverse has been around for many, many years, as long as we've had social media and sites that we're networking on, because we are living in sort of a metaverse. It's just the digital self. But recently, there's been a lot of excitement around it because we're seeing a lot of these protocols, things like Decentraland, which are virtual worlds that run on Ethereum technology. And that's exciting to people because in the virtual worlds we used to know of as of a couple of years ago, like Fortnite or Second Life, those are all owned and operated by single companies that have control over the economics, the services, the goods that exist in that world. And you can't take your persona and move it to another world. It has to live there. What the metaverse, as we're describing it today, layers on the decentralized technology of Bitcoin, Ethereum, DeFi within those virtual reality worlds, so that you can actually have this existence that you can transport with you wherever you want to go. People are excited about that because it opens up the world of what it means to live in a virtual reality or work or play games in a virtual reality.
Yeah. I sort of feel we're almost already in the metaverse with the way we consume social media today. But
right, Twitter, if you have a Twitter account and you have a profile picture and you're one type of person on Twitter, that is your metaverse persona in a sense. Sure.
So I wanted to ask particularly about central bank digital currencies. First of all, I'm assuming your view is that they are something that will happen, and I wanted to find out from you if you think that they can happily coexist with, let's say, private market cryptocurrencies.
So one of the biggest differences between a central bank digital currency and a cryptocurrency like Bitcoin is that the central bank digital currency is actually backed by something. In this case, it's the U.S. government, the same way the dollar is backed by something. And there's definitely a use for that. I think it's important that American citizens have better access to the financial system, even in the centralized bank world. Mm-hmm. And so whether or not that happens, the U.S. is exploring it, other countries around the world are exploring it. It'll be good just to get individuals used to using digital currencies, which we think is valuable for the overall digital currency ecosystem. But it's important to know that it's very different from something like Bitcoin, which is not backed by any single government or group of people. It's really just based on code and people's belief that that code does what it's supposed to do. And so in that sense, it's more like gold, which is not backed by anything. It's just valuable because people like that it's scarce and transportable and divisible and can be stored and it's been around long enough. But that's very different from a central bank digital currency.
Looking out how this sort of story unfolds, the way I see it, cryptocurrencies are such headline-grabbing assets, but they're still relatively small in the grand scheme of things. And when I think about central banks who are looking to design their own digital currencies, they seem in sort of a rush to do it. Mm-hmm. But I wanted to ask you, why are central banks in such a rush to do it when actually, couldn't they just wait to see what the private market does, experiment with them, make all the mistakes, and then the central banks can come in and create one that's kind of already had the mistakes ironed out and be the one that works?
Yeah, I think what you're identifying is that this space moves very quickly. And I think there's often a concern that whether you're an individual or an investor or an entire government, you're not staying abreast of what's going on as much as you need to, and you could get left behind, or in the case of a government, some new risk might arise and you're not protecting your citizens, for instance. And we're seeing this on the Grayscale side because things are changing so quickly, and investors want to know, well, like Bitcoin, I get it, Ethereum, I get it, DeFi is this new thing, I'm trying to wrap my head around it, and things keep changing very quickly. We talked about metaverse, NFTs are a new use case that people are very excited about. So I think it's just a natural response to changing technology, and it's understandable why governments might want to move fast to make sure they're staying ahead of it. I see this personally on the regulatory side of seeing the U.S. government, like the SEC or the CFTC, try to figure out how they should or should not be regulating the space. Should they be going to Congress to change the laws and regulations because they're not, should the SEC and the CFTC be going to Congress and asking that they change the laws because they were written at a time before cryptocurrency, let alone the internet, even existed? So I think it's just a natural response to governments seeing this innovation and want to make sure that they're doing what they need to do to stay ahead of it.
If central banks start to make their own digital currency, do you think they will remain very accommodating in the sense that they won't mind there being a private market for coins like Bitcoin, for example? Or do you think that once they've got a central bank digital currency that's kind of working and in use, they will try to somehow edge out the private market, or they won't have the power to do that?
I think it depends on where Bitcoin goes. Right now, the term cryptocurrency is somewhat of a misnomer, at least for Bitcoin, because today it's really used more as a store of value, a digital gold.
It's not a functioning transfer of wealth.
Right. It would need to be a true currency, it would need to be not only a store of value, also a medium of exchange, which it has and is becoming, but then also a unit of account. So people would have to think in terms of Bitcoin. You would have to go to Starbucks and think this coffee costs 0.001 whatever Bitcoins. And people aren't doing that today. So I don't think...
Just you, maybe.
Yeah, just me. The mental math is super easy. And there actually are conversations to break down the denominations of Bitcoin so people can think more in that type of unit of account sense. But until that happens, I wouldn't think the US government would do something like ban it or say that you can't use it as a currency for the sake of this US dollar, now central bank digital currency. And we've seen US regulators explicitly say they have no intentions of banning it or restricting it. I think they didn't need to say that. I think it was already implied, and not that they necessarily even could do that, but still, that was a very positive thing for the market to hear them explicitly say that.
Well, let's talk a little bit about SEC and the CFTC, because obviously the Bitcoin ETF just been launched, futures ETF. Is that generally a very positive sign, sort of validation for the whole sector?
Absolutely, yeah. So the race for a Bitcoin ETF has been going on since 2000.
Is it something that Grayscale yourselves
we are very much involved in it. So the efforts to get the first Bitcoin ETF have been going on for many years. Grayscale first got involved in that in 2016 when we were seeking to convert our Grayscale Bitcoin Trust, ticker symbol GBTC, to an ETF. And the way that process works is there's several different filings that you make with the SEC. But back in 2016 and leading into 2017, it became very clear that the SEC was just not ready for this type of product, whether based on physical Bitcoin, like our products would be, or based on Bitcoin futures, which is actually the ETF that was approved a couple weeks ago. And the reason for these disapprovals was the SEC was looking at the underlying Bitcoin markets and seeing that trading takes place all over the world in marketplaces that are not necessarily as regulated or have the same types of investor protections as US-based markets. And so they, in their disapproval orders explicitly said, we would like to see either proof that there is not any fraud and manipulation in those markets, akin to what we're seeing in other US markets, or you would have to prove to us that a significant amount of US or of Bitcoin trading takes place on a regulated US market, such that if there is any fraud and manipulation, we could detect it, find who's doing it, prosecute them, and eliminate it. So those are the two methods we have been working on over the years to get the SEC comfortable. And at least on the Grayscale side, we have a very ongoing, robust, open dialogue with all of our regulators. We think that's the way that we should be operating our business. And so a couple of weeks ago, we were very excited to see that the SEC allowed for trading of the first ETF, not in Bitcoin, physical Bitcoin, but Bitcoin futures. And that's a very good incremental step, but we don't think it's what the market really wants or deserves. What the market should have is a Bitcoin ETF that holds physical Bitcoin, because that's really the best way to get exposure. You don't have to worry about additional costs from futures contracts, rolling futures forwards. There's no limits on the amount of AUM the fund can take in. So that's really just how we feel based on both guidance we've gotten from the commission and also just thinking logically for the investor. And so we filed an additional 19B4 a couple of weeks ago to start that process officially off with the SEC. But in the meantime, we've been doing everything else to get ready to convert our GBTC into an ETF.
So I know some people love to draw parallels between cryptocurrencies and gold. And I know when gold created their first ETF, the actual underlying saw a big boost. And I'm wondering if you think that's similar to what's going on in Bitcoin now, or do you think it's wrong to be drawing similarities between the two?
I don't think it's wrong, but it's a very different circumstance. And before I even answer that question, what I will say is we're often hearing, why is there not a Bitcoin ETF yet? And my response is, well, if you look at gold, for instance, that's an asset that's been around for tens of thousands of years of human history. And even that process to get the first ETF took many years from the date of the initial filing. That's for an asset that has been around for a long time. Everyone's
comfortable with it.
Correct.
It exists in real life.
And for Bitcoin, I think it's totally understandable that it's taken a few years from the first filing dates to get our regulators comfortable with this type of product. So I think that's totally normal. I think they have a tough job dealing with any new innovation because on the one hand, you want to allow it to flourish and have America continue to be the tech hub of the world. But on the other hand, you want to make sure that you're protecting investors, which is the SEC's core mission.
Right.
And so I think it's understandable why it's taken so long. And then to answer your question around should we be comparing this to the gold ETF, the difference here is that with the gold ETF, we didn't have this other investment vehicle that already was offering gold exposure to hundreds of thousands of investors around the US and the world, like we do today with GBTC. So we're constantly doing analysis and running numbers. And if we were to convert GBTC to an ETF today, it would be the number 2 or 3 commodity-based ETF in both AUM and volume, just behind the Spider Gold Trust and the iShares Gold Trust. So that's a totally different situation from what you had with the gold ETF. And so I think it really remains to be seen how the market responds when these ETFs eventually in our case, convert, and then in the other one's cases, get approved to start trading. So excited to see it.
Well, now you've got us all so excited, as you say. We're all underinvested in crypto assets. We all feel bad now about ourselves. But what do you feel stops the momentum it's got now? Is there anything that sort of keeps you up at night and thinks, from either a regulatory point of view or some possibility of like financial crime point of view? Is there anything that you think can sort of undo the momentum that it's got behind it now?
What I worry about is that the regulations around this space will not be either applied or rethought in a thoughtful enough manner to allow this asset class to properly flourish the way that I hope and think it ought to.
Can you give some examples around that? Like in terms of where regulation is right now, which seems to be, I don't know, you're more of an expert than I am, but relatively hands-off. And then when can they actually step in and start to actually, damage the value of the coins?
It's a great question. What I go to is looking to the early days of the internet, late 90s, early 2000s, where there were a lot of new use cases that were enabled by the invention of the internet. And there certainly were at the time laws that if you applied them literally, it could have eliminated a lot of these use cases and these
Derailed
companies.
The whole thing.
Correct. And the US government under the Clinton administration took a do no harm approach where they said, let's step back, let's not overregulate this, let's see what it is, find out what all the benefits are, then identify the risks, and then rethink if it's worth having new laws that we should write up to apply to this space. And that's what happened, and the internet is now one of the greatest inventions known to mankind. Silicon Valley is in the United States, it's not in another part of the world, and we benefit so much from that. The fact that Google and Apple and Meta, Facebook, and all these companies are US based, that really affords us a lot of benefits and advantages. And I hope we can say the same thing about the cryptocurrency space, because I think that it is one of the next best inventions after the internet. So, my hope is that the rules and laws that exist today will not be unnecessarily applied unless it's something like protecting investors from fraud and manipulation and things like that. And we are seeing that from our regulators. People are committing common bad acts using this technology, which are no different from the types of fraud that could have always been applied to people just using older technology.
There's some coins that seem to be shams that attract people.
Right, and go after those, prosecute those, but don't go after the companies that are building new things with this new technology until we find out what the real benefits are. And just to use like another specific example, the current financial regulations were written in the 30s and 40s in a world where you needed to have an intermediary to do any type of financial transaction, whether it's selling stock or exchanging assets with somebody or creating a derivative. It assumes the existence of an intermediary, like a broker or an exchange or a bank or some other firm. What cryptocurrencies allow you to do is eliminate those intermediaries and do those transactions without the intermediary, which eliminates a whole host of risks that these laws were written to prevent. And so, technically speaking, there might be a use case that is not necessarily in line with the regulations as they exist today, but that to me is a reason to either not enforce them or rewrite them and rethink them.
Now, back in my day when I was investing in equities and I was like trying to stock pick, I would do my bottom-up fundamental evaluation or look at the outlook for a particular company, and that's the one I go for. But if I'm looking across the crypto asset spectrum, how do I know? I'm basically asking to pick the winners and losers, Craig. So no big decision. But how do you know which ones are going to work and which ones won't?
It's a very difficult question.
And that's why you invest in companies like Grayscale.
Yeah, no, I think part of our value add is investors come to us not knowing necessarily what coin or basket of coins they want exposure to. And in part, they're putting their trust in our name brand and the diligence that we're doing on these protocols and the product structures we're creating. So yeah, that's one of the reasons why they come to us. But I think there's 10,000 coins, and 95% of them maybe probably won't be relevant in the future. But that still leaves 100 to 200 coins, if not more, that will actually be very meaningful. And so those are the ones we try to create product structures around where we see value.
So if you had to wind the clocks forward 5 years and give some sort of predictions about just the topics that we think we'll be talking about in this area, what do you think they would be?
I think what it'll be is similar to what we talk about today in what's now defined as Web 2.0. So that's the web, where a lot of it is controlled by a handful of names, Google, Facebook, Amazon, Apple, where a lot of value has accrued to those companies for the services they provide. Web 3.0, which is taking those use cases and then decentralizing them, is what people are very excited about. So I think we'll be talking about these services today, how the existence of tokens that allow you to govern these networks and make choices around them and engage with them, or what we'll be thinking about in terms of where is the value going. And it'll be more of a user-defined world, user-generated world than the world we have today, which is very much controlled by a handful of centralized single entities.
Well, Craig, there's so much more we could cover. I've learned so much from you today, and I just want to say thank you for taking the time to chat with us.
Likewise, yeah. Thank you so much for having me.
Thanks a lot.
Yep.
The debate is over as to whether digital currencies will be a part of our lives or not. They emphatically will be. The question is how and when will they be adopted, and who will win between the private and public markets? Is there room for both? Well, the race is on, and the winner is likely to appear in the next few years, and that's why it's crucial to be learning about this now. If you'd like to read more on this topic, please go to FTSERussell.com/research, where you'll find much more information.